All right. All right, everybody. Welcome back. Guess who I've got again? Philip Chan in the house. Philip is back for episode number 3 together. Philip, how you doing?
I'm so great, man. How are you doing, Dr. Bryce?
I'm doing good. I'm doing good. Excited for our weekly episode. We had a little break last week. Philip was a traveling man, always doing things. So we took a hiatus for a week, and it's good to have you back.
Yeah, man. That's why I love being in business. You get to see different sites and be in different events with high caliber people. I was just in Phoenix for the nine-figure boardroom. So that was super exciting.
It's amazing. It's amazing the opportunities that you'll learn about and see if you just kind of step into those spaces. Am I right?
Yep, that's right.
All right. So we are continuing our series. We are moving on and pushing forward with our series on investments and talking about futures in terms of non-traditional investments. So we're gonna try and tackle, and we're not even gonna try, we're gonna do it. We're gonna talk about leverage today in terms of how it relates to the futures financial market. This is such a dense topic. There's so much information in this, but Philip is going to do such a great job of breaking it down. So Philip, I'm just going to let you kind of go ahead here and kind of tell us about like what you mean by because leverage is kind of a vague term, right? And so I think it could be defined different ways by different people. So go ahead and tell my audience what do you mean exactly by
Yeah,
leverage?
well, first and foremost, what I mean, right, and what to pay attention to when it comes to anything investment or investing related is the three segments that are super important, right? Inherently, you're going to want to look at what is this investment's initial barrier to entry, right? Or the initial investment required. Then the second thing you want to look at is the runway, right? How long does it take for you to invest in this asset class to actually see results? And thirdly, you really want to look at the ROI, the rate of return, right? That everyone is most ecstatic about. However, a lot of people only look at the output. They're not necessarily focused on the input. So with leverage today, what we are going to do is essentially formulate a compare and contrast between several different asset classes, just like your microbiology flowchart or blood clotting flowchart, where we organize and isolate in a very systematic way so that those who are listening can get a stronger grasp of how things are actually categorized in the financial world itself.
Yeah, and so that's going to be helpful for us because us like physicians especially, we work in categories, right? We work in algorithms mostly nowadays. And so and I've always thought of investing in terms of what I now understand as more traditional investments, right? And so, but I just really had no idea about these kind of alternative or non-traditional things. So I really, if you can, just break it down because us physicians, and this is why we're recording this episode, we have a pretty good amount or pretty good information on like what the traditional investments are, but we don't get exposure. I mean, we read White Coat Investor, right? That's our Bible, but it really doesn't go into these these alternative investments. So can you break down? Can you kind of set the stage for the categories, the flow chart, and everything, and let's talk about that.
Yeah, of course. So first and foremost, you want to look at what constitutes as traditional versus non-traditional or alternative investments, right? That's where we start. High level overview. We're going to do a Google zoom out before Google zooming in, right? So high level overview, traditional versus non-traditional. Let's talk about traditional, right? On the left side here, we're going to have real estate, stocks, mutual funds, treasury bonds, as well as your college education, right? As college education is obviously a form of investments. On the right side, we have alternative investments, specifically under derivatives lies futures and commodities, right? Being in the same neighborhood as stock options, cryptocurrency, art, and even luxury timepieces. So understanding that there is this dichotomy of traditional versus non-traditional, that is the first step. Now, under traditional, right, is also the concept of fundamental analysis, right? When I say fundamental analysis, we're talking about stocks. So why I bring that up is because within stocks, when you are doing your research and due diligence, global economic trends certainly matter. interrelatability of markets certainly matter, right? And of course, the trajectory of that company, right, from what you have researched and done your due diligence on, is speculative in this case, because you have to recognize as a shareholder investing in that company, it is not something that you have direct control, right? You're not the CEO, you're not the founder. You're saying, hey, based off what I see, I think this company is going to take off. So I'm going to take a bet on Apple. I'm going to take a bet on Tesla, IBM, Nike, what have you, right? But at the end of the day, within fundamental analysis, there's more moving parts, right? Very similar with real estate. Fundamental analysis certainly plays a role because of how interest rates and the federal government issue certain rates, right? And unemployment, all those things affecting the housing market, right? I'm not a real estate expert myself, but I do know that there are several moving parts. And of course, finally, you have colleges, right? Now, colleges is not necessarily about fundamental analysis. Of course, your amount of student loans, your amount of debt incurred, may relate to how colleges and universities are doing as a whole from a business standpoint. But really, right, we want to look at these things and understand that under traditional investments, right, this is where fundamental analysis really plays a pivotal role. Versus alternative investments is more about technical analysis with charts. And so for us, right, what we're looking to do is identify between 5 to 7 factors within the futures and commodity financial markets from these charts. And only when these factors are in confluence do we enter in a trade. So the difference here between fundamental and technical analysis is because technical analysis is based on a skill set that you have direct control over, it allows you to take advantage of these markets in a more commanding way as opposed to being speculative.
Yeah, and that's the interesting thing about it is that there's these two overarching pieces is the fundamental and then the kind of the more technical. And the fundamental stuff, I think it's fine. It works. It has its place, right? And these are people that really want to study it and just learn it. But like physicians, I think, and I guess I have a little credibility in saying this because I am a physician. We are just technical people. We like to analyze stuff. We look at lab data. We look at x-rays. We look at the patient. We look at what meds they're on. We look at their past history. We integrate all of these factors together, and then we make a decision. And that's essentially what we're doing here, right, with trading futures, right? And so it's right up our alley. I'd be hard pressed to find a physician that doesn't say, well, this is both like stimulating to me and challenging, but also fun and also very similar to the job I'm doing right now. So, and I think the other piece that you brought up is control, right? Like we physicians love having control. We just do. That's why we went to medical school. We want to make the decisions, right? And those kind of those non-traditional realms, we just really don't have a lot of control. So now let's go into, and so we've got both sides, right? So we understand there's futures, there's crypto. We're on your what was your right side that you said, right? So we're going to focus on futures today. We know about crypto and everything, but so let's kind of break down in terms of because this is something I really didn't know is like those main three topics you talk about, barrier to entry for them, your return on investment and the runway, like for how long you can do them for.
Correct.
And
Yeah. So of course, since we're going to focus on futures and commodities, let's talk about, from a comparison standpoint, like a systematic way of doing controlled experiments in the lab, right? Let's take colleges versus futures. Okay.
yes.
So in this sense, your typical initial investment or barrier to entry in colleges, and I'm not even talking about med school. Let's just talk about colleges. Okay.
Right.
It's 5 to 6 figures of student loans, depending on where you go to school, in-state, out-of-state, private, right? And so the average student is spending about 5 years on campus. So now the runway, right, on your 5 or 6 figures investment is 5 years. But your
Mhm.
ROI, generally speaking, is 40 or 50K as an entry level position. Of course, you have your engineering majors. They're looking to garner 80, 75, 80K. One of my buddy who very, very successful, studied petroleum engineering from KU. His first job started him at about 120, 130K, right? But
Yeah.
that's outside the norm. I'm talking about the norm. So please, understand that's where I'm operating from. Now, let's tack on graduate school. Okay, medical school. I don't know where you went exactly, but I'm very familiar with KU Med, right? My sister went to KU Med. I was at KU Med for my master's. All my friends went to either KU Med or UMKC. But within KU Med, you're looking at like maybe a quarter million after four
Mhm.
years of med school,
Yeah.
right? And then you're getting paid for residency like 30 to 40K. Like not a lot of people understand that. Physicians are getting paid 30 to 40K during residency, which the average is 3 to 5 years after med school.
Hmm.
And then on top of that, you have fellowship and subspecialties within fellowships. So what's the runway now, Dr. Bryce?
Yeah.
The initial barrier to entry is definitely six figures. Are we talking about low six figures or high six figures? It's not five figures anymore when you incorporate medical school and graduate school. The runway is now a minimum, right? 5 years in college, 4 years in med school. That's nine. Plus, let's just call it the longer one, 5 years for residency. That's like 14 years without
Hmm.
fellowship and subspecialty, right? And depending on what you're doing, you may be getting a little bit better pay during fellowships, but not that much until you actually come out, right? Are we in congruence there, Dr. Bryce?
Oh yeah, yeah. I mean, we'll get to this later, and what I love about futures is like the barrier is just so low. I'm a resident. I don't make, I make maybe 50, before taxes, and so yeah, like the salary's nothing, and I work 80 hours a week to do it,
Exactly.
so and you're right, like my runway to get here has been astronomical. I mean, it's been so long. I actually did even a victory lap in undergrad because I changed med school. So when you put 14 years is almost half my life, it's half most of our lives. So
Well, and the
extremely
interesting
long
for you,
runway.
Dr. Bryce, is you're actually a non-traditional student,
I am. Yep.
which
Yeah.
means you want to actually, I'll let you go ahead and elaborate on that for the listeners really quickly.
Yeah, I mean, I did 5 years in undergrad. I made a decision in my junior year of med school or of undergrad that I wanted to go to med school. So I had to do, 5 years of undergrad just to complete the classes. And then I went to Michigan State and I did my 4 years. And but then I was in the Navy, right? And I did 1 year of internship. And then I finished my time in the Navy for another 3 years. So that so and then I moved back to Michigan, practiced independently for a year, and then now I'm back in residency for another 2 years, right? And so I started, this whole journey when I was, gosh, probably 21, and I do a shorter residency. I'm family med, so I'm now 34, almost 35, and so that's 13, 14 years, right?
It's
And
crazy. It's
right,
crazy.
and it's not a straight runway. It's zigzagging everywhere. So
Well,
yeah,
a lot of people don't realize even within med school, like fundamental analysis, right?
yeah,
um,
exactly.
you
Yep.
have to appease your person running your clinical rotations in order to get the highest chance of being matched into residency. Because there's this matchmaking process, right? And
Yeah.
during third year, most people don't understand there's medical school hazing. Like you think only fraternities have hazing. There's a little bit of hazing during clinical rotations where it's like you could stand up for yourself if some conflict arises, but if you do that, you're putting yourself at risk of that person that would sign you off on your the grades for your clinical rotations, and essentially put you in a lesser chance of getting the esteemed residency program,
Right. Yeah.
right? So even within med school, like there are structures in place, but there's a little bit of politics in there. There's a little bit of appeasing personalities and note like self-awareness on when to speak your part and when to be silent despite you not agreeing with whatever is going on.
Yeah, I mean, it makes the run, it just extends the runway that much more,
Exactly.
right? And in the runway there are bumps and obstacles and left turns and right turns and turnarounds and comebacks and all sorts of stuff. So yeah, I mean, when you really think about it, it's astronomical. It really
And
is.
then let's talk about the ROI. I mean,
Yes.
the ROI here, right? Six figures initial investment, 14 years excluding fellowship for the runway. Let's talk about your ROI. If you were to continue as a practicing physician, which you do not plan on doing, right? what would you be looking at with your experience, expertise, and resume?
Yeah, I mean, with everything, and I'm family med, right? And that's kind of bottom of the totem pole. And so, you're looking at maybe, at best, at least for the jobs that I've looked at, like 225K, which it sounds like a great salary, right? But like you said, the runway to get here was so long. And then I mean, I have colleagues that went to like a Caribbean med school or a very expensive undergrad school. And, their debt is near, yeah, I mean, $500,000, you know what I mean? And so, you're looking at that. I mean, if that was my case, which it isn't exactly, but it's not far from that. You have to I have so much more, I have a big gap to cover there. And then there's just life otherwise. I've had so much time of like wanting to like buy a house, buy a car, do everything that, it's hard to hold that back. And that's what gets a lot of us in trouble is that we've had this delayed gratification.
Yeah,
So yeah.
absolutely. Now, it's interesting, right? Because I think when we were just getting together, we're really building a strong relationship, not just in business, but as a friendship. You were kind of sharing with me that the White Coat Investor is one of your like investing Bible,
Yeah.
right? Where you guys are mainly talking about stocks and even real estate, right?
Right.
So
Right.
when you take these three segments of barrier to entry, runway, and ROI, what type of insights have you now gleaned when you compare and contrast stocks, real estate versus futures?
I mean, it's amazing because like you're like reading the numbers for like especially like the barrier to entry and in real estate, I think real estate's really the big one for physicians. Like we were really pushed in that direction. There's so many physicians that partake in that. And I think that's fine. I think there's good reasons for that. But like I mean, it's expensive to even, I mean, to be able to get into real estate, number one. And, your return is going to take years, years and years and years to really get you to back or to return, even get a return on your investment, let alone a profit on it. You know what I mean? So, it would just all seem daunting in the context of, well, I've also got to pay back my loans and probably buy a house and probably buy a car and figure out, and I'm making 225K. Like, I mean, it's hard to buy a good investment property with a salary like that. It honestly is. I mean, maybe if you're married and you have two incomes, but it's much more difficult versus futures. I mean, I can trade futures as a resident on my salary right now. That's amazing. And then in the next episode we'll talk more about it, but just by growing and scaling, you get a quick return on your investment. There's a low barrier to entry. I'm trading futures. I'm a 50K a year resident and I've become profitable doing it already. It's amazing. It's
Right.
amazing.
And it's all because it's based on a skill set, right, that you can cultivate.
Exactly.
The
Yep.
more you cultivate your knowledge and skill set, the more money you can make with it. Now you said that's interesting, right? So you talked about how you guys are generally pushed towards real estate. I just want to make sure I clear this up for everyone. So what are the three segments within real estate then? Right? Since we're talking about leverage, right? This is what leverage means, right? When you break down each asset class and you basically do a summary of the leverage you have with the three segments, and then you compare it to other asset classes to really find the best style of investing that's more so fitting for your financial capability. Remember, futures and commodities is specifically short-term investing. That is the style. So in real estate, right, it's obviously more long-term, just like stocks and colleges, where you're looking at a 20% down payment. So initial investment required or barrier to entry is 25K, 50K, even 100K, depending on the types of properties we are discussing, right? The runway in general, right, is 3 to 5 years just to break even or become profitable, right? Some can get it done in a year and a half to two or a year, but I mean, that's the average. Again, we're talking about the average.
Right.
And the ROI, again, on average is 8 to 12 annualized and 15, right, if you're lucky. So, from your experience, now that the listeners really get a firm grasp on the three segments when it comes to investing, how do you see, right, futures fitting in this conversation?
I mean, you just compare the two, and it's very simple to do in that way, right? I mean, for example, I'll give my personal example with it. My barrier to entry for futures was $500. Now, $500 can still be a lot of money to a resident, don't get me wrong, But like you said, if you learn the skill set and everything, you can grow and scale that. And so in the grand scheme of things, it's really not a lot of money. The runway, I mean, is just it's like almost not even there. You know what I mean? I mean, it's kind of you kind of combine the two in terms of like the return on investment, but like I mean, I made $400 in minutes. You know what I mean? It's not, this is I'm minutes, like seconds, multiples of 60 seconds. And so from there, then I have, my barrier to entry even decreases even more, and I just keep growing and scaling. And so it's just it's astronomical. It's powerful now. It is based on a skill set. You have to learn that skill set. Obviously, it's not just this isn't gambling, this is a very technical analysis like we talked about, right? And so, but once you start learning that skill set, I mean, the world is your oyster. It really you're off to the moon if you want to be.
That's right. And for the listeners hearing, okay, $500 barrier to entry off of one contract, and you're able to garner $400 within what, half an hour to an hour and a
Yeah,
half.
half an hour, right? Yep.
Yeah. Now, obviously, we're going to go into the secret sauce and details on the next episode. But as a high level overview, like people are when they hear that, they immediately go, "What are you talking about? How is that possible? This is too good to be true, right?" You want to address
Yes. Right. Yeah, and I'll be honest. I was first say this is too good to be true. It just can't be. There's just no way. And again, we physicians we're supremely skeptical. That's what we do. That's how we're trained. We're trained to think. If we think it's one diagnosis, no. If someone tells us it's one diagnosis, nope, it's a different one, right? So we prove it otherwise. And that's about the proof. And that's why we want people. I want people to come to the classes like I did and just see. It's just I watch the trades happen with your business partner and it's amazing. And he literally says like, this is probably going to happen. And he does. And then boom. And if you're trading on his level, you're making a family practice physician salary in a day. It's wild. So the proof's there. It's there. And I mean, people say it's too good to be true. It can't be that easy. It's not easy. You have to learn the skill set. I mean, you do have to understand all that, but that skill set to learn is much less than what we've learned as physicians. Let me tell you, it's like you say, it's a tenth of a Robinson's pathology book, and maybe less, honestly. So
Now, one of the things, because I'm surgically trained myself and I pivoted out of medicine before I got into med school. So when I witnessed my business partner, trade like a machine, I always describe it from my, over 200 hours in the OR room as he's cultivated the ability to perform microsurgery on a
yes,
trading platform, right?
yes,
Where at this point, when you talk about the results he's generating, he's trading 100 contracts, right? So for someone who is trying to just get the grasp of one contract before scaling it to 10 and 20 and of course like 50 and then 100, like how my business partner is now doing after 20 years of experience, what would you liken the beginnings to? If the 100 contracts is microsurgery on a trading education platform, where is this beginning medical analogy?
yeah, that's a great question. And so basically it's just about like learning to use your stethoscope, right? To like diagnose and treat, right? So you put it on, you're a little uncomfortable, or even looking at using your otoscope to look in ears. How do I hold the ears? Do I hold it up here? Do I hold it down here? Which way do I hold it, right? And so, but as you get more and more advanced, right, with your physical exam, skills, you kind of like, okay, I can run through this seamlessly from head to toe heart, ear, head, eyes, ears, nose, throat, heart, lungs, right? And then you develop this skill set. And then with that, you learn how to interview patients. Okay, I've added that skill set and ask those right questions. Okay. And then I look at the vital signs. Oh, boom, there's another skill set. You know what I mean? And then, so as you get more and more confident in adding all these things, the vital signs, how the patient looks, what they said, what your physical exam is, you add all these things together. And then so at the beginning with just your stethoscope, you've got like one contract, right? You're just kind of hanging out. But towards the end, like where I am now, where I'm almost done with residency, I'm pushing more chips to the table. I can handle a full attending schedule in clinic, and I can walk in a room and pretty much within a few minutes know what's going on. And I can predict and diagnose very accurately because of that. And it's the same thing with futures trading, basically.
Yeah, so you're basically, for our fellow medical professionals listening in, right, or those who have a background in professional training, like your IT professionals or engineers, this is just about developing a systematic way to identify patterns and factors that stand out that indicates, hey, ding, 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 this setup should be something that you ought to pay attention to, right? And when the setup is fully there, right, when all those 5 to 7 factors are in confluence, that's when you pounce on it and enter the trade, right? Which is why I always say when people listening and they make some comments like, we are not day traders, right? We're not spending 5 to 8 hours in front of the screen. We're trying to be as surgically precise as professionals so that we can extract points from the markets and utilize those points and to turn into profits like it is our own personalized ATM machine.
Yes. And that's the perfect segue. So we got a few minutes here left, Philip. We were just talking about the weather before we came on. So we're going to do a little forecasting ourselves for next episode. So tell us what we're going to talk about next, because I think these next two things, I mean, this is just going to really, put the icing on the cake, right? And bring this all together. So let's talk about what we're going to talk about these next two episodes and people won't want to miss.
Yeah, so obviously today we're really hammered on leverage. First and foremost, understanding that no matter what investment vehicle you choose, it's about the fit, right? So in terms of investing, always look at the three segments involved. What is the initial investment required, or the barrier to entry, as I like to say, the runway as the secondary component, and your ROI, rate of return, okay, as your tertiary component. And what we did today was not only discuss these three components according to stocks, real estate, and colleges under traditional investments, but compared it to futures and commodities under alternative investments. So on our next episodes, we're going to dive in, because you hear us allude to it all the time, right? Why is this a skill set? What makes it a skill set that you can actually cultivate so that you can grow and scale the skill set and eventually allow you to build a business out of it? And that's what's the most exciting part is, there's the business component. And as someone who hails from the city of international commerce from Hong Kong when I was 9, that this is something that I really love when I learned that not only can you utilize the trading as a foundational skill set, but how on the back end, if you have the savvy and acumen of a business owner, right, that you can actually generate additional income streams associated with the skill set. So we are going to be very skill set focused on our next several episodes, and that is the weather forecasting here from Kansas.
I love it. Just like a weatherman. Just perfect. Perfect. I love this. We could talk about this stuff all day. I really could. I mean, I'm just fascinated with this stuff, and we're going to the moon. So if anybody wants to join us, please do. We highly recommend it, because you don't want to miss out on this opportunity. So, all right, Philip, thanks so much. Again, I will put Philip's contact info in my show notes. I will book out. I will put his calendar link so you can book a call with him. Do it. You won't want to miss it. Reach out to him on LinkedIn, and we will be back next week. All right. Thanks, everybody.
Thank you so much, Dr. Bryce. Take care now.